Welcome back to the Rogue Trader podcast. Today I'm joined by Jason Sen. Jason is a veteran. I suppose that's a good word to use, Jason. I'm not sure I'm a veteran, but I'm probably older than you. But from a trading floor perspective, you're certainly a veteran of the trading floors, life, and several other markets as well. So the transition from trading floors to working from a screen, Jason, how did you find that?
I was actually quite lucky because I was an options trader. So I think futures traders found it more difficult. But for me, it helped the maths. So when you're in the trading pit and, let's say you buy 500 call spreads, you need to calculate your gammas and your deltas, sometimes your thetas, depending on which options you're trading. So, you had to be quick with just your basic maths. And then when we went on screen, that was amazing because you do a trade, you do your spreads or whatever, and bang, all your Greeks are updated on your screen. So you know exactly how many futures you need to hedge with immediately, and you know your gammas and your thetas and your deltas and whatever else. There was a different skill set, but it was easier for options traders, I think, compared to futures traders who maybe they were more with their senses, the audible stuff. You know what it was like, Nick, on the floor. It was a lot of senses, wasn't it? And visual as well, because you can see, sometimes you can see the order flow. You can see what the brokers getting their orders from the phones or whatever it might be. You can see who's doing what. If JP Morgan are offered and Goldman's a bid, you know that. Whereas, of course, as soon as you go on screen, so much of that information disappeared. And I think futures traders, some of them really struggled. Obviously, some of them thrived and figured it out very quickly.
Yeah, I think that was probably the biggest change. The fact that you can't see what people are doing, and there's almost a leap of faith, if you like, through that. So, just a bit about your approach to trading, Jason. I know that it's very technical. Far beyond anything that I could ever imagine trying to do. But if you just give us a little bit of an understanding of the technical nature of what you do, how much it's dependent on the charts and what they are saying to you is probably the easiest way to explain it.
Well, actually, it was the transition that you just talked about that led me onto technical analysis, because after a while, trading options for, gosh, I don't know, it must be nearly 20 years, I was like, kind of worn out with options. You never get away from it. You've always got a position, even when you're on holiday. You cut your position down, but you've always got risk. Yeah. And in the end, I was like, okay, I've had enough of this. I'm going to try and trade futures, and I was catastrophic. I lost 30 grand of my own money real quick about 20 years ago, and realized I've got to do something to try and find an edge now, because my edge is gone. So that took me to technical analysis. So I've been doing that for 20 years, and now I just totally rely on technical analysis for my edge. But pretty simple. My strategy is trend following. I find that a lot easier to go with the waves than try and push against them. I use Fibonacci's, trend lines, moving averages, and focus on the 1 and the 4 hour chart. And that gives me enough signals to try and find some decent trades during the day.
And it's the combination of all of those, Jason. There's not one that you favor over the others. It's the combination of them all coming together at the same time.
Well, interesting question. If someone said to me, you can only use one tool, I think I'd probably rely on Fibonacci levels. Right. They're probably the one that would give me the best results. But yeah, I combine that, as I said, with trend lines, moving averages, and price action. I mean, you're a price action trader, so you understand it better than I do.
Yeah, and I mean, the thing that's very noticeable in the markets over the last couple of weeks, and I've seen some of the stuff you've been putting out, Bitcoin and gold, volatile as you like. What are the charts saying to you in relation to those two? I suppose the question that everybody wants to know, and I'll probably defer to you on this one. Where are they going next?
Okay, well, you asked me about Bitcoin. What was it now? Blimey, it's gone quickly, but it must be 4 or 5 weeks ago. Yeah, shot past. And we talked about it sinking a little bit. I think you had a bit of a negative outlook on it as well. Yeah. And it's certainly done that. The break of 91,000 was key for me. Bit of a double top pattern. So it's playing out, just basic technical analysis, really. We hit that sort of 108,000 area a couple of times, and we've come back down off it now. Broke the 91,000. So my target is the low 70,000 area, and I think we got to 78,000 last time. Then we had a really strong bounce, retested that neckline to the head and shoulders. So I think we now get to 74, 72,000. I thought at the time that might be the low and that would be the best buying opportunity. But actually, I think we might have enough momentum to get down as far as the mid 60,000 area. There, I would think it would probably be a really good buying opportunity. It might be the low of the correction. I mean, this stage obviously is a correction. I wouldn't call it a bear trend.
Yeah. Would you be able to show us that on a chart? Have you got a chart of that available?
I sure can.
And maybe just talk people through it just a little bit so that they can understand what you're looking at.
Indeed. That's gold. We'll go back to gold later. Okay, here we are. So the double top pattern I talked about is fairly obvious. December peaked just over 100 and what was it now? What was the exact? I hit 108,000. We retested that in January and actually got to 109,000 and change. For me, that was a potential double top, but it's not confirmed until you break the low of the neck, which was at 89,612. I actually took the break of that little trend line that you see there as my sell signal. The two little lows that with the long lower wicks. The long lower wicks show that buyers came in aggressively. So therefore, for me, if that broke, it proved that those buyers were no longer there. Big red candle on the break. So I wasn't the only person thinking about selling it on the break. I guess there was a lot of stop loss orders in there as well. As I say, the first move to the downside was 78,000, if I remember correctly, 78 to 70. Big bounce. I tell you what, the crypto markets, technically, I don't trade them, and I really should, because technically they do tend to work extremely well, probably better than the Forex markets. I mean, look at this. It's basic. We broke the 100-day moving average, and that then acted as resistance. That's the blue line. We've got the 50-day move crossing below the 100, which is a negative signal. Just as it crossed, we retested the neckline that I drew with my trend line. We rejected it. We came down. We're now back below the 200. You know, there's just it's such a good technical market. We're now holding below the Fibonacci levels around the 86, 88 area. So for me, yeah, further downside to my fib levels down here. To be precise, it's 73,800, 72,800. I would be surprised if we didn't get there now.
Okay.
Okay, that could be a really good support level, because when you go back, you can see that the highs from the previous all-time highs from March 2024, April 2024, and May 2024, that was all around that 73,000, 74,000 area. So it will be an interesting support level.
Okay, and you mentioned gold as well. Let's touch on that while we're there. Just see how that's moving. It's another volatile day for it today. I think it's sort of between that 29.15 high 2800s at the moment. Yeah,
you're absolutely spot on there. For me, it's now in a consolidation phase. So we all know that gold's been in a huge bull trend. People have been loving this move. But for now, there's a bit of a consolidation, and I'm slightly confused. I identified that we probably would consolidate early on. You know, there were some negative candles, which they weren't sell signals, but they were showing exhaustion. They were showing the market was running out of steam. Some doji candles there as well, showing a balance in the market. So I was projecting a period of consolidation. Now, we have to wait a little bit longer. In fact, although this has been going on for about a month, for me, we have to wait a little bit longer to actually identify what kind of pattern that's going to be. Is it going to be a bull flag? Is it going to be some sort of descending channel or a triangle or something? But you know, you're right. We are volatile, but we're ranging for the last 4 days. So it's great if you love a range. I don't know what markets you favor, whether you like a range or a trending market.
I definitely prefer a range, Jason. I'm always looking to sell into rallies, buy on the dip. So the ranges suit me a bit better. But anything trending too aggressively tends to work against me, shall we say? So
yeah, I think I knew that about your trading style.
So the summation there is there's no trade in gold, and you're probably still a bit negative on Bitcoin. Is that fair?
Indeed, yeah. I've got a feeling that gold won't see 3,000 yet. I think we need a correction to the downside, but that's just a guess rather than a technical indication.
Yeah. All right. Just a couple of other short themes whilst we finish this one up. A couple of things that I was thinking about overnight. Meme coins. Do you own any? Have you ever owned any?
I haven't, and I'll be honest, I don't really have experience, so I'm not really the right person to talk to. But I really should learn more about them.
Well, no, I don't think you should. They're just complete hot air. Is my summation of them. I looked on with disdain when we saw a Trump coin, a Melania coin, and I think there's been one called Libra as well, which the Argentinian president floated as well. I think
When are we getting the rogue trader coin then, Nick?
well,
About time.
that would probably be the one that everybody avoids, and rightly so. But maybe that's something we should think about. But most of these coins have lost 95 to 99% of their value, so they are, they get ramped. They're pump and dump, and why people are still getting involved in them, I'm not too sure.
Probably because the dump phase is so much fun, so that's why people get involved. It's just avoiding the dump.
But you know the way that happens. Everybody jumps on board. They get involved. It may not be big money, but somebody is making big money on the other side of it. It reminded me of a story, and this is completely out of context for. Well, maybe it's not. I was going to say it was out of context for what we're talking about now. But I remember a story years ago where somebody working in a government office who was paying salaries to hundreds of thousands of people was just taking off the decimal point of these salaries. And so, you might have been losing out 25 cents that month. I'd be losing out 75. But when you add it all together, it adds up to millions over the course of a year. So, you think it's doing no harm, but these things are doing harm. And, thankfully, I think what's probably happened with these meme coins over the last few months is the liquidity has been taken out of the market, and people won't get caught out as much as they have been in the past. So I wasn't surprised when you said you didn't own any. You might be surprised. I don't own any either. But a couple of other things that I was thinking about, just, looking at the way the markets are responding to Trump in his second term as opposed to his first term. Don't know if you have an opinion on that. The market seemed to be far more wary of him this time. But is that because we're already at such a value in the market? Everything's has rallied so far over the last period that people are taking profits, and it's maybe not such an indication of the way that people are looking at Trump. But tariffs are obviously a major concern going forward.
Yeah, I think you've hit the nail on the head. It's the tariffs that have rattled the market. Difficult, isn't it, as a trader? You know what it's like. You're sitting there and you've got a position on, and you're never quite sure. He's only got to open his mouth.
Exactly.
And you can be, you can be looking at, you can have cleaned up, or you've stopped out. And the problem is, I had a position on Friday, I think it was, and I forget what he said. It was probably a tariff thing, and markets rocketed. Well, the stock markets, I think, jumped and then reversed. Oil, I think I was short oil. I just got stopped out at the top. Then that reversed. So
yeah,
can be tricky, but can be fun. It was so quiet during some of the other presidencies. So, as traders, maybe we should be happy that we've got this volatility and unexpected news popping in and out to create some volatility.
Yeah, I think in the first term, though, the majority of what he said was positive, or what he delivered. It's just, the other thing that I find quite strange when I turned on the TV the other day, and one of the press conferences were going on in the White House, and I'm not a political person. I don't really get involved in politics. I think I've only ever voted in the UK once. I haven't voted since that time. But when you think about a government and how a government is constituted, there is a little bit of pushback within that government. Sometimes you can have a vote of no confidence. I just don't see anything like that coming down the line for Trump, because everybody sings his tune to the letter. The press conference, whenever there's anything negative said about President Trump, they're jumping down people's throats straight away. It's
quite a unique style.
it's unbelievable. But you surround yourself with so many yes people. I suppose that's the output that you're going to get. But I always used to look at governments as being, obviously it's all one-sided. You've got the same views, you've got the same sort of opinions, but you do need to have a bit of pushback within that. And it's almost, I hate to use this word, but Yeah, he's not challenged, but it's almost cultish, Jason. It's
Mm.
you know the extent to people follow the letter of the law under Trump, or what he wants to follow is just unbelievable. You look at that, the conversation that they had with Zelensky. You look at some of the press conferences. It's just
Never seen anything like that before.
it's just so over the top. And then you've got Elon Musk. That was the other thing as well, which I find completely strange. But it's almost like Trump has brought his younger brother along to the government to be a little bit more trendy and on point with cryptocurrencies and using Bitcoin potentially as a reserve going forward. I just find some of it so out of kilter with the first term, and there's a massive difference within that. So look, exciting times. The markets are. Say that again.
He is certainly entertaining. I've never really been interested in American politics, and you just can't avoid it now.
Yeah, no, there's no way to avoid it. But it makes for interesting times. And like you said, every time he opens his mouth, the markets move, right? And that's good.
On the right side of it.
Yeah, you want to be on the right side of it, of course. All right, look, Jason, thank you very much for joining us today. Fascinating, and we'll be back on here very, very soon. Take care.
Cheers, Nick. Speak to you soon, mate.
Cheers, mate.